Hello everyone, I hope you've all had a great week. Welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, unfortunately, there's not too much of an update really for the charts today. Most charts today, it has been a bit of a slower session. We're seeing some mild gains and losses throughout the market, but there's not really been anything substantial to update you on yesterday. So rather than waste your time, I'd recommend, broadly speaking, if you want a more in-depth analysis, check out yesterday's video, but I will try and provide a short update here for the charts. We can see, for example, euro dollar, we are still trading below the 104.50s. We've come back to around these 103.60 level. We've come back and we have retested the 104.50s as resistance. So really what this is, we've seen this rejection of the 104.50, which is effectively, at least in the short term, confirmation of the break below, which is quite a bearish signal. And we appear to be heading south once again. The next test, of course, is just going to be these previous lows, so the low of 103.66. If we break below here, then all of a sudden it's looking quite bearish again, potentially into around these 103s again. We've got quite a way to go before we reach that next area of support around the 101s, and along that way I'll probably be looking at the big round numbers, so the 50s, the zeros, to provide possible support, and using the price action, of course, but also the momentum indicators to provide some backing on this as well. We've seen some consolidation in cable today, but we have broken back below the moving average band, which I think is quite an important move. Apologies if you heard the squawk there. So we've broken back below the moving average band, and it does look like we are headed towards these 123 levels, where we've got the 38.2 Fibonacci retracement potentially providing support, but also this prior zone of support as well. Like I say, the fact that we've got low highs and lows for the day makes this look more like consolidation, which is potentially a continuation pattern rather than a reversal setup. But I guess we'll see. You've got clear support here around the 123.80s, clear resistance here around the 124.50s. If we break to the upside, then maybe we are going to see a bit more of a move, maybe back towards these 125, 125.10 levels. But to be honest, I think this looks broadly like a consolidation. You can probably even put a little bit of a channel on here, which makes this look more like a kind of a rising channel, so consolidation pattern, and I would expect, broadly speaking, to see a break back to the downside here. So we'll be interested to see how that materializes, but like I say, not really any change today, just consolidation in the cable pair. Looking at euro sterling, broadly the same. We are just seeing consolidation now around that important head and shoulders neckline, but no real developments as such here. In the Australian US dollar, we are seeing developments. Actually today we have seen a continuation of that sell-off, and importantly a break below this very important support level, because in a break below here, especially given we've seen such a very negative few days for the Australian dollar versus the greenback, that break below really does potentially open up a move back towards these kind of 71.50 levels. So I think that's going to be an important one to look at here. Just around here, around the 71.50s, I think we could be looking at moving back towards, with potential support being found along the way, maybe around these 72 to 72.50 levels. You can see it was a little bit of resistance found here, but also more importantly around this area here, the 74.50s, and again back here, you could even argue as well. So maybe the 72, say the 72.50s could provide some support along the way, but really, given the break below such an important support level and the momentum very much being with the bears, I think we could be looking back towards these 71.50s. Let's take a look at dollar CAD, and we've seen another break to the upside today. Now we saw that 134 level rejected at the first time of asking yesterday. This was a prior level of support, and also the 61.8% retracement of the move from the most recent high to low. So it was always going to be the first test really for this pair. We saw it rejected at the first time of asking, but we are moving higher again. A second rejection at that level could be quite a bearish signal and suggest we're going to see these 131.50s come under pressure once again. Whereas if we move above the 134s, then we could potentially be looking for a move back towards these 135, 35, 136 kind of zones. So important level coming up here around those 134s. The yen, we are seeing further consolidation yet again, which given that we're trading at a key resistance level for dollar yen around those 118, 118.50s, shouldn't come as much of a surprise. If we do see a break above those previous highs, and again, as yesterday I said on the video, these 120s could be targeted. However, a failure to make new highs here, potentially suggesting that we are a little bit overbought at this minute, could prompt a bit of a correction, and the zone would then, I'd be then looking at, could be around these 116s, given the fact that we are pretty much long overdue some form of significant correction in the dollar yen pair. We're still looking very bullish in the pound, despite the fact that we are seeing a bit of a consolidation. We saw the rejection at the 148.25s, and we've seen this interesting candle form now. This is a shooting star candle. We've also broken below the rising channel, which suggests to me we may be due a correction here as well, which would be consistent with a correction in the other yen pairs. Also, I think the key test now is going to come around these 144s for me, because this is where you've got the moving average band and the Ichimoku cloud on the 4-hour chart, possibly offering support for the pair, and a break below here could point to a much broader correction in the sterling yen pair. Next up is Euro Yen, and let's open this up on the daily chart to begin with, shall we? Scrolling out once again to get more data so that it can show the full moving average bands. And again, we have been hitting this big resistance level around the 124, 124.50s. So the fact that we are seeing a bit of a correction potentially here, or consolidation at the very least, potentially leading to correction, isn't actually that big a shock to me. I'd be, with all yen pairs now running into resistance around these important levels, don't be surprised if we do see a bit of a correction in this pair now, because like I said, it has been quite the relentless rally. Potentially look at the shorter term charts for signs that the correction is going to deepen. The fact that we've seen a higher high being made here and then a lower high being made here could be seen as a sign that's going to happen. The important level now is around these 122.50s, 122.75s, because this is the most recent level of resistance and most recently support, and the break below here could suggest that we're going to see this 121, 122 zone come into play, at which point that becomes the important zone on the 4-hour chart, because a break below here would suggest that things have turned a little bit more bearish, which isn't, like I say, isn't a bad thing in the shorter term, because ultimately we have seen quite the relentless rally, so these corrections are healthy. In Brent Crude, we have seen it make a new higher low, although things are looking a little bit toppy here. Once again, but the fact that we've made a new higher low is the important thing. We've made that higher low around the same area that was previously resistance, around these 52 to 52.50s. Again, resistance here and here again. So the fact that we've seen it find support isn't too much of a surprise. The next test for it really is going to be these 55, 56 levels, twice rejected previously before we saw this correction. A third time rejection, a failure to make a new high above 56 could suggest we're going to see a broader correction again, at which point these 51.50s really do become very important. Got a potential head and shoulders forming here, a break of which could signal a quite significant move to the downside. Same is also true in WTI. Again, looking a little bit toppy. We had these two big rejections here following the rally after non-OPEC countries agreed to the output cuts. We are seeing it rally again, but again, these 52s could become an important resistance level, and a rejection at this 52 level could see these this kind of 49 well, $50 really level come under significant pressure, and a break below there could be quite bearish and potentially again signal a sharp move to the downside. A break through the 52 could see this 53, 50, $54 level tested, and again failure to make a new high, potentially signaling that the WTI crude is looking a little bit toppy. Nothing really more to add for gold. We are still trading around these 1130 levels. You can get more analysis on yesterday's video, but in reality I do think 1100, 1110 is looking a stark possibility in the short to medium term in gold. And finally, let's just wrap things up with the Dow or the US 30 on our charting. Still trying to break through that 20,000 level. So far, tried again today, so far failed, but who knows? We are in the midst of the Santa rally right now, and if 20,000 is broken, then that could prompt another surge higher. It'd be a shame to see the year out and 20,000 remain intact for the Dow, but like I say, let's see how things go. Sometimes lighter trade, as we're expecting to see next week, can actually prompt a little bit more volatility in the markets, and like I say, with everyone feeling So happy and optimistic. I think it wouldn't be surprised me if we do see that 20,000 level broken. And what will be interesting, is if we see it broken in later trade, that can actually spark quite some significant moves. If we see, for example, if there's a group of stops, for example, above this 20,000 level, a break of that level could actually trigger quite a sharper move higher. That's all for today. Once again, I hope you all found this useful. Again, as always, all feedback is welcome. Put some comments in the bottom. Thank you for the feedback which everyone's given so far. It has been broadly positive, which I very much appreciate. But any feedback is always welcome. I'll always look to improve these videos in any way that I can to make them more helpful for you all. Aside from that, have a great weekend, everyone, and I'll see you again next week. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.